everybody, it's Stacie Duffy here, your Denver Metro Real Estate Resource. And did you miss the window? Yeah, you kind of did. So for sellers, I'm getting the question a lot of, hey, did I miss it? Something's happening. I've heard the market's changing a little bit. So I'm like, thank you. It is changing. Media hasn't quite caught up with that yet. But there's always, the talks of with the interest rates going up. That's really what has gotten the media's attention. So that has changed the market situation a little bit. Some of this is going to be seasonal, which normally would have happened, as I've mentioned in my other market update videos recently. Some of this that normally would have happened end of May, early June, started in about early April because of the interest rates going up and some buyer fatigue and some other things like that. So yes, we are at that point where most of the general public doesn't realize that the housing market is adjusting. The people that are in it right now realize that it's happening, and the agents that have been working in it every day realize it started about 6-8 weeks ago. So, and that's when I posted my first market update videos about, hey, the shift is coming. We're starting to see it. It's definitely here. So for those people that are listing their house right now, or even in the last 2 to 3 weeks, have realized that, hey, I didn't have the bloodbath that I was expecting. Like, yeah, I got over list price, but I didn't get the 100K over list or the 20% over list or something like that. So that's why the agents, a lot of us have been, for people that are like, oh, summertime is great. And I was like, I'm always tell people like earlier is better. Earlier is better to get ahead of that seasonal adjustment, because what you don't want to do is be listing right in it because you don't have a realistic expectation and you don't realize what's going to happen until it happens, and then you freak out. So a lot of agents, a lot of sellers are starting to freak out like, oh, my property made it through the weekend and I only had 5 or 6 showings. I can't tell you how many agents in my office, just we've been talking over the last few days as we come and go, of I only had 6 showings. I only had 4 showings. And I'm like, guys, calm down. It's okay if it takes 2 weeks to sell your $750,000 property, not like 3 days. So, and we all know it and we all get it. It's just, it takes time to adjust to a new normal, and I think the entire world has realized that normal changes really quickly now. And so that time hasn't happened yet. We haven't adjusted to the new normal. So people have to realize that, okay, it's not going to be the bloodbath if you're listing your property. There are a couple properties that I've offered on for some of my buyer clients that have been really aggressive, but the agents knew that was coming and they priced accordingly. And personally on one of these, I thought they overshot and they went way too low, because I said, hey, this property is probably worth way more than this. And we bid up and we were not at the top. My buyer didn't have the means to go to the top. But they did a really strong offer, right? So it's one of those of, it's just in that weird, awkward time where it's going to take people to adjust to the new normal. And a lot of the challenge there is the interest rates for buyers. So normally, yes, we have the adjustment, but the interest rate changing so volatility in the rates is probably the best way to explain it. The interest rate being so volatile is what's causing a lot of unrest. And it going up so quickly. So it going up so high so quickly. So like I said, time to adjust. So time for buyers to adjust. A lot of the buyer issue and a lot of the reason for the back on markets right now, you're going to see more back on markets here over the next 2, 3, 4, 5 weeks, is because these buyers got pre-approved at a different interest rate 2, 3, 4, 6 weeks ago. And then now they're going out to buy and they're not talking to their lender like every day. I'll tell you, I have had probably 5 conversations with my go-to lender about 3 different clients in the last 3 days. Like we're talking almost hourly of, hey, what's the situation? Does that change your buying power? Okay, now what's the plan? Okay, let's get everything lined up and then we'll double check and make sure that's going to work. Because as quick as things are changing, buyers don't realize that rate they got approved at, and then they got under contract at a certain price. And now that price, now that they're under contract, and it's been a couple weeks since I talked to their lender, is going to cost them $250 more per month. And it's no longer affordable, or they can't qualify, or it's more than they wanted to spend. And they're backing out because of those costs. And because there's concerns of, with the rates going up, am I getting priced out? Like, is the market going to crash? That's always the question. Is the market going to crash? Guys, if I knew that, I would be so much richer than I am. But there's indicators of, yes, we're due for a recession. We're due for things to slow down a little bit. The Fed is increasing the interest rates to help control inflation. That's great. We still have a housing supply problem. So with a lot of the indicators, a lot of the experts that are much better at this than me, a lot of the economists are expecting, okay, housing prices they're not going to skyrocket like they have been. That's part of our issue. So let's slow that down a little bit. Doesn't mean that your house is going to lose 30% of its value Okay, that's a housing crash. That's a bubble. That's a 2008 all over again, is that your house loses 30% of its value in a short period of time. Mind you, 30% of that value, just happened in the last 18 to 24 months. But so it's not like it would be the end of the world, because it's not like we're going back that far. But, it's settling into a new normal. We're due for that. I'm excited for that. The buyers need an opportunity right now. So the struggle for the buyers is with the rates increasing, it's like, whoa, I thought I could get that, and now there's not a million people competing over it, but now it's going to cost me this much instead of this much. So tempering some buyer expectations and saying, okay, let's see what their options are. So I'm suggesting some of my buyers talk to their lenders about an ARM. I know people haven't talked about ARMs or adjustable rate mortgages in a really long time. They were the reason that a lot of things went awry because people didn't understand them. If you're not going to stay in a property a long time, it's an opportunity to consider. I am not suggesting everyone do this. I am not a financial advisor. I am not a lender. Go talk to those people that know more than I do. But I'm recommending to my clients that they talk to their lender about their options, bring up some options. So if you're only going to be in the property 2, 3, 4 years, does a 5 or 7 or 10 year ARM make sense? I have some lender contacts in the industry. I've heard of some, agents that are working with lender clients that said, hey, I'm getting an ARM for myself as a lender because I feel confident, and with their level of knowledge, they feel confident that they're going to be able to refi into a better rate, 2, 3, 4 years down the road. So that buys them some time. It buys them, it puts a clock on it and forces them to take some action, whether that's sell the property, whether that's refi, whether that's do something. It forces them to take some action, but they figure that's the best cost picture for them in the current situation. So talk to your lenders about your options, okay? We're starting to get to that point where the buyers have it's going to be a little less competition. It's going to be a little slow. People are taking vacations as things are heating up. As far as summer, school's going to let out. We're going to have some of that seasonal lightening in the buyer demand. And we're also going to have a little bit of lightening in the inventory. So a lot of our inventory came on right when the interest rates went up. And so that's what caused some of this sellers freaking out of like, oh, but my house didn't sell for $100,000 over the list price. Holy crap, guys. That should not be the expectation. Yes, it was happening. Yes, the buyers had to do that to compete. But just because it doesn't happen doesn't mean it's the end of the world, okay? Your house didn't need to appreciate 20% in the last, 3 weeks because someone bid that much over the list price. So that stuff is happening, okay? Things are going to slow down. People are going to feel a little uncomfortable. When people are uncomfortable, they don't make decisions. They tend to stay put, okay? So for some people, that's a good thing. For others, it's an opportunity. I did a video on buy now or wait, and I'll link to that up above and down below. Okay, that should help keep those prices not from going through the roof again. Now the interest rates going up is still the issue. And there are a couple more increases expected that the Fed has told us they've been telling us for a year that they were going to increase rates. And now that they did, everyone's like, oh, the rates are going up. Well, imagine that. They told us it was going to happen. Holy crap, people. Okay, the time to adjust the new normal. So I'm just going to come back to that each time. So they're telling us it's probably going to continue to happen because they got to, that's their lever that they're going to use to pull in on inflation. I don't deal a lot in economics, not my area of expertise. I just read things and listen to articles and listen to people and read articles from people much smarter than myself. So things are happening. It's going to get weird for a while. Does it mean it's not a good time to sell? No. Does it mean you're going to get this buyer bloodbath of 100 people wanting your house and bidding 20% over the list price? Unless you underprice your property, probably not. That's not a bad thing, okay? Let's reset our expectation for what the market should be. Let the market do its job, okay? It will adjust. It will, buyers will come to a new normal. They realize that, okay, rent is getting flushed down the toilet. You don't get money back on rent. If you're paying interest, yes, it hurts, but you get some principal back. You get to write off the interest on your taxes if you make enough to itemize on your taxes. There's some other benefits there. It will still make sense to buy, just like it made sense for people to buy at a 13% interest rate back in the day, before I was old enough to buy property. That stuff happened. People, 7, 8, 9, 12% interest rates happened. People still bought houses. People still sold houses. So not the end of the world. It's a shift. We knew it was coming. I've talked about it coming. It's here. Let's temper our expectations and just deal with what we know when we know it, okay? We don't have the crystal ball, but we have an idea of what's going to happen over the next 3, 6, I'll say, 30, 60, 90 days probably is a better way. 1, 2, 3, 4 months. So let's work with that. Let's see who has the opportunity in that time period. In my opinion, it's the buyers that have been really well qualified, but they weren't comfortable bidding crazy over. Or maybe they have a high income, but they don't have a ton of cash to work with, because the buyers that didn't have cash to bid over the list price and guarantee appraisal gap and still have a big down payment, the buyers that couldn't compete in there, but maybe they have a great credit score, they have really good income, they just didn't have a lot of cash, they didn't want to pull cash out of their other assets or something like that. Those are the buyers that now you have a chance to go get something without a million people wanting it. Because of that, if you can tolerate the volatility in the interest rates and you have the income to justify and to offset that, or maybe you aren't on a tight monthly budget, because of that, our 800, 850, 900K plus price point above, so from that, I would say that 850K up to like 1.5, 1.6 million, that's still really aggressive, because those are the people that, oh, okay, yeah, the interest rate's up, that's fine. I'll pull a little bit of extra money from here. I have the income to cover it. Not a big deal. And also they're in jumbo rate territory. Jumbo rates are not as volatile as the conventional rates. So, and which is crazy because jumbo rates are typically at a premium. Right now, they're not. So if you're right on that border of, hey, I think I want to spend 700K, depending on the conforming loan limit in your area. Here in Denver Metro, it's about 647, 648, depending on the county that you're purchasing in. If you're right on that, like, hey, I want to spend about 750, 800K, and I want to put a good chunk of money down, and your loan amount is right in that conforming loan limit gray area as far as topping out, you may want to jump up just a little bit, only because you can probably buy more house when you get into the jumbo territory for a lower monthly payment, because that interest rate is going to be lower. So you can actually buy more house for less money each month, because that money savings is straight in the interest rate. Unless you need the write-off, which is fine, but most people will find another way to spend the money and get a write-off versus spending it on the interest if they don't have to. So for that part of the market, it's still pretty aggressive. I've got a buyer on that price point right now, and I've let them know, hey, I still expect some competition. There's going to be some softening for the houses that aren't gorgeous, that aren't, oh my gosh, an amazing property for the price. Those ones are going to sit around a little bit longer, which is okay. But there's still competition there where there's not as much competition in your first-time buyer, second-time buyer, under 800K price point here in the Denver metro area. That's where the opportunities are, and that's where the sellers are freaking out, and that's where the buyers are having an affordability problem as far as with the rates going up and not being able to tolerate that. But if you have the income and you can qualify for it, and you are aware that, hey, maybe you want to refi down the road, maybe that gets you into the place without having to have the cash up front, that's a good area. Those are people that have the opportunity right now. Okay. So sellers, if you got to sell. There's still tons of comps out there to justify it. And the buyers are still expecting this crazy market. Like, they know things are changing, but they haven't adjusted to, hey, there's not a million offers yet. So for sellers, that's the advantage, right? Because I'm always going to advise my client based on whatever's going to promote and protect their interests. So for sellers, it's, okay, let's price this where it still grabs the buyers. It's very well priced for the condition. Let's look at the comps. Let's make sure we're not trying to get that primo price point like we were at the end of February, early March, when we were taking advantage of that bidding situation and the buyer demand and everything else out there. Let's make sure to price it a little bit more strategically where we get enough people in that it doesn't sit around, it doesn't get stagnant, and then people don't worry there's something wrong with it, and then we end up chasing the market downward, because that happens in this seasonal adjustment time on an annual basis, is people start chasing the market downward, and you start seeing those price reductions because they're freaking out that the house didn't sell right away. So it's really work with your agent, be strategic. If you're looking to buy or sell and you would like to interview me here in Denver, I would love the opportunity for an interview to see if I'm a good fit to work with you. So feel free to reach out to me. My contact information is on my website. Link for that is down below. If you're looking to buy or sell in another area and you want an educated agent that is in the market every day and understands these things, reach out to me. I have an amazing network. I would love to set you up with somebody who's a good fit for you. So anyway, thanks so much for the time and have a great day.